It is another fun-filled day in the markets. But today we're going to take a little bit of a break. We're going to detour a bit. And we're commodities guys now. We're going to be talking about the El Nino that is impacting the global economy, what that is going to mean in the years ahead. What are some clues from previous El Ninos that we can that we can parse through, figure out what could happen in the markets. We're going to dive into that, some of the day's headlines. Before we get going, please hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We are not financial advisors. A couple guys who love following the markets. I guess we trade corn futures now, who knows? But please do your own research before making any buys and sells. Kev, it's been a relatively ho-hum day. We had a little bit of news. Powell spoke today, reiterated that we're looking at the chance of back-to-back rate hikes. The market responded negatively. I thought that was already pretty much widely known and implied at this point, but whatever. We also heard that the Biden administration is considering stopping Nvidia and AMD from sending AI chips over to China. So not great for my Nvidia shares there. That's why they're taking they're down a little bit on the day. Pre-market, they were down real bad. At this moment, they're only down, 1.5%. So it could be worse. But what are you looking at in the markets before we get into our El Nino discussion?
Nothing too crazy. Again, I think we're seeing a little bit of pain in the Dow, not much though. Nasdaq looks like it's pretty even on the day. Thing that I woke up to that was pretty interesting was the Binance US news with Prime Trust. There being outstanding discrepancies between the amount that needs to be withdrawn versus the amount that is available to withdraw. It's like $82 million difference. So that's not necessarily a great look on Binance US's part, especially just associating with an institution like that. And then again, I saw that TUSD also depegged, which was, I think, is pretty important because that's one thing that I think has been propping this market up. But seeing that depeg from $1 to 90 cents on only Binance US's exchange is really interesting. Maybe they're trying to find some liquidity somewhere. And then, other than that, I think Michael Saylor buying the top again. That might be the only other thing that I saw. I saw that they bought it 165 million or something like that.
Yeah, he bought a lot of Bitcoin. They got a lot of Bitcoin over there at MicroStrategy. GM Randy, good to see you. Mr. House, I also think of Bill Nye, the science guy, an all-time great, a legend, if you will. So, Kev, outside of those things, is there anything you really want to dive into in the markets? There wasn't much that came out today from a data standpoint. We'll have more to discuss tomorrow with the final Q1 GDP number, initial jobless claims. We saw some retail inventories come in. Nothing too interesting there from my standpoint, but anything that you want to discuss before we get into the El Nino?
Not necessarily. I think we can get into it. Only thing, maybe the dollar, but it's rebounding a little bit today, probably because of what Powell said, but nothing worth looking into. So I think we can get into El Nino.
Yeah, the dollar is up and the VIX is down again. I don't even know anymore, man. We live in the upside down. All right, let's move on from that and let's talk El Nino. So before we get going with that, I want to give some credit to where I've been getting some of my information from. So originally I got turned on to this by seeing a Bloomberg article that flew kind of under the radar. Looked through some stuff from the World Meteorological Organization. Brunel University in London had some really good essays about this. So just wanted to give those some shouts up at the top because I didn't. This wasn't an original thought that popped in my mind. This is something I saw and then I dug deeper into. I know that you've been looking into it as well. So we just this year started an El Nino. So it goes from La Nina to El Nino, and this is for many parts of the world a hotter time of the year. Some parts of the world actually get more rainfall, and we'll be discussing kind of where those areas are and how that impacts their economies. But what tends to happen in these situations is a drop in GDP growth, and it's especially bad in some of the emerging market countries. So we a few weeks ago we talked about Latin America. Well, may not be the best time for Latin America here in the coming year or so. What we also need to understand is once the El Nino happens, when we've been through it, the economic impacts of that are not felt until usually the following year or maybe even the year after that. So it is definitely a delayed effect. It may be hot as hell where you are right now, and that'll have impacts on our day-to-day life. But economically, we're not going to see that further down the road. And what often happens is a spike up in inflation, which when you combine that fact where we combine that fact with where we're at right now globally, it's a recipe for disaster. Like normally, an El Nino is bad for the economy, but when we also just multiply it by the fact that we're in this like post-COVID trying to come out of this high inflationary environment, it could be really, really bad. And this could be the bounce back up in inflation later this year, early next year, that leads to that double dip recession that Kevin has been going on about for quite a while now.
Yeah, definitely. Again, just from reading some of the articles and some of the ones that you sent me, uh, it's a global phenomenon, right? It's something that affects pretty much the entire, every single market in every country. Some areas do see some benefits of, El Nino, but it's not enough to outweigh the amount that is, the damage that actually is taken by, you know, this year, this event coming every few years. So it's going to be really interesting to see. But I do think, again, this is definitely a catalyst for higher inflation, for a spike up. Will this be the end all be all? What's going to actually drive it up all the way? I don't necessarily agree with that, but I do think that it's definitely going to affect a lot of prices. I think it'll affect supply shock for a lot of commodities, and it's definitely going to, it's definitely going to affect price stability, which we've seen Jerome Powell talk about all the time. How price stability is like number one goal, along with bringing inflation down. So it's definitely going to be. I think it's going to be a huge catalyst.
Yep, for sure. So I want to kind of run through some of the areas that are going to be most likely affected by it and what parts of their economy are going to get hit the hardest. So India, they usually see a hotter, drier condition as a result of El Nino, and that's going to impact a lot of exports, including rice, cotton, corn, and soybeans. So more like a lot of stuff that's going to impact the cost of food, driving up inflation. In the U.S., we're already seeing incredibly high temperatures down in the Southwest, right? Like Texas is insane. That's gonna we've all heard the stories about how bad Texas's power grid is. It's going to continue to be that way. We know that in California we see rolling blackouts. That's going to be really awful. Here in Colorado, I remember last summer, it was incredibly hot, and the my energy bill was like $300 a month. It was obscene to air condition my house. Now, my wife and I got solar, and our bill's looking a little bit nicer now, so I appreciate that. But take that higher cost of energy with the fact that that's going to hurt inflation. People are already stretched thin on their bills. We talked about the student loan debt yesterday. There's another thing to compound onto that. So we're looking at a higher inflationary environment for energy, which is going to stretch people even thinner. It's going to cut back on discretionary spending. That's going to hurt stock valuations. That's going to hurt the economy. We look at South America. Parts of it will be incredibly hot and see droughts. That's going to hurt, produce output. Chile, on the other hand, they tend to see a lot of rain this time of year. That's a negative due to the fact that they produce 30% of the world's copper, and it's going to shut down access to copper mines. So there's another piece right there. Once again, leads to more inflation. When we look over at China, during previous El Ninos, they've seen incredibly high temperatures that has forced them in the past to have to shut down semiconductor plants due to strain on the power grids over there. So when we kind of map this out, it leads to a lot of excess spending on the consumer level. It leads to less production output, which in turn is going to lead to higher prices. These companies got to make money. They got to hit their quotas. They got to try to hit their numbers, and that gets kicked on down to consumers. So when we look at people don't really take this part into account when they're looking ahead. But if this is as bad as a lot of people are expecting it to be, a lot of experts who are much smarter than me know a lot more about this than I do. It could be pretty rough when we start to move into the end of this year, early 2024.
Yeah, I couldn't agree more. It's it's insane to think that a lot of these countries are going to be affected even worse than they currently are. Like we were just talking about inflation in Europe. This is going to affect imports going into them as well. It's not necessarily going to help price stability at all. It's pretty much a given that this is going to be pretty detrimental. It depends on also how hard it does hit, right? So we could see if temperatures go to a point where it's just super arid in certain areas that necessarily are going to be producing a lot of these. It's not going to be, it's going to kill crops more. If it's a little bit tamer, it won't be necessarily as bad, but still there is going to be, a huge economic downturn. What was it last time? The last El Nino was somewhere in the $5.3 trillion that it cost, right? And that was globally, right? Global markets. So this is no small sum of money by any means. It's 2 Apple market caps. But it's definitely a good amount to a point where it's like, okay, this is going to affect consumers most likely the most, right? I mean, it's sure it's going to affect companies, but who's going to end up, getting hurt the most by a lot of this? It's going to be small time people, retail investors or retail or just consumers in general in, the market and the economy. So not necessarily great.
Yeah, we've thrown around stagflation before, but this is definitely a potential catalyst for that, right? Like once again, when we talk about stagflation, looking at higher inflation, lower demand, higher unemployment, and that lines up with a lot of the historical data that happens due to El Niños. When we talk about that higher inflation point, we've already laid out how that is a very real possibility here. That in turn, the cost of everyday goods of energy bills is going to reduce demand in a lot of other parts of people's spending. And then unemployment, we know that over here in the US, the Fed has been trying to tame employment, cool that market off. If we see a lot of these other things, it's a domino effect. And I
Yeah.
think that we maybe it's some other catalyst, or maybe this doesn't even happen at all. But I think to dismiss it and to not pay attention to it and not give some credence to the idea that this could lead us into another really bad economic setup for next year. And we've been discussing this like repeat of the 70s when we had this like lost decade. Like I don't know if it's going to be that severe, but this is lining up to be pretty brutal.
Yeah. And again, the longer this plays out, obviously the worse it's going to get if something bad like this happens. Nino just absolutely hits, and we're just like, it's one of the worst ones on record. And, it's super hot in areas where it shouldn't be. And then it's just, super wet in areas where it's like, okay, it's to the point where it's not even beneficial for crops or anything like that. So definitely keep an eye on it. And again, I think the major thing is we do see negative GDP growth in periods of El Ninos. And again, we talk about this double dip recession. We would need 2 quarters of negative GDP growth, recovery, and then we would need to see another 2 quarters of negative GDP growth. So maybe we eventually see this, and it's like, okay, we get another recession fairly quickly compared to the one that we saw in 2022, when we did get 2 negative quarters of GDP growth by a technical recession, right? That could be it. I think that it might not be this. I think this is just going to add on to a place that we're currently in, where it's just not going to be beneficial to get out of here. I think it's just going to cause inflation to be extremely sticky for the next 1 to 2 years, which also kind of lines up with what Powell said today, how he doesn't expect inflation to be at 2% this year or next year, right? He said
Oh
that
yeah,
today.
I believe. Yeah, I mean, I believe their target for inflation by the end of next year is like 3.5%.
Yeah, so I
Right?
mean,
Like
this
that's what
is
I saw.
this is going to affect their outcome too, right? It's gonna be battling, the Fed. Maybe El Nino is the one that's able to beat the Fed and break everything. Who knows? But yeah, it's not necessarily a great look, but I think this is lining up with a lot of things, especially with stickier inflation in the next few years.
How we doing, Ace? We're commodities guys now. That's what's happening. Do you want to start looking at some of these charts, Kevin? I have them. I got the tickers. If you want to, work your magic on them.
Absolutely. What's the first one?
Let's just go down the line with what I have here. So we will start with rice. So ZR1 exclamation point is the rice futures chart that I have pulled up.
All right, from Studio T.
Yes.
Cool. All right, sharing it right now. There we
We're
are.
talking veggies today.
Talking veggies is right. Veggie Tales. I know you guys had those VHSs. They gave it to us from church. I'm just kidding. Ooh, my goodness! Look at that rice feature. That's a nasty rice feature right here. Look at that gap. We got to fill that, boys. That is. No, I'm just kidding, but that is a pretty big gap from here to there. So when we're looking at futures, obviously the price is going to differ from day to day, obviously, because it opens and closes at different positions. But we see a gap here and a gap there. But with the rice futures on a daily, it looks like it's oversold and it's going to go up, right? It wants to go up on stochastic RSI. But let's take a pretty good look out. And we can see that rice is actually taking a pretty decent dump recently, right? So let's take this high, which was on June 15th. So where we are currently, and that's a 24% drop. Wonderful. That's terrible. That's pretty insane move, right? We can also see that there's this gap here, which is arguably, let's go here. It's about a
So if we want to
7%.
look back a little further, the previous El Nino was 2018 to 2019. I'm trying to look for some historical clues. Now, let me preface this by saying, like, I don't think Kevin and I are actually going to be trading commodities. I mean, I can only speak for myself. I don't know if that's going to be happening for me. Kevin, he's a wild card, so you never know. But if you're not comfortable trading this stuff, please, for the love of God, don't try to like force it. Okay, like this is we're kind of we're talking about like some serious stuff, but then we're also just kind of having some fun with it too. So just keep that in mind.
Here's the thing with trading commodities and oil and all this shit. The problem is anything in the world can fuck these charts up in a matter of a second, right? Like with oil, I mean, fucking Putin could be like, "Nah, we're not going to export oil anymore," and then the price shoots up and you can make $1 million. But if these motherfuckers are like, "Yeah, we're actually just going to start shipping oil everywhere," or some oil tanker blows up in the middle of Kansas, that could shoot the price up or down. So you really got to be careful because natural disasters and all this stuff that affects these prices. I mean, it's probably why we saw that massive gap. But if we look on the monthly, what was the last time we saw an El Nino? Was that in 2018? You said
2018 to 2019, and then also the most, if we want to like look worst case scenario,
yeah.
1997 to 1998 is one of the most devastating ones in recorded history.
Wonderful. We didn't have any features back
If
then.
this, okay, well, we don't need to worry about that then.
Yeah. So the rice came in post El Nino in 1997. But if we look at right here from the February 2018 2019, we do see a bit of a dip, right? It's let's see, that's from about $13 or 13 grains of rice per share down to about 9. So $13 to $9, that's about a 27% drop. I guess that's pretty big. Again, if we're looking at this in terms of commodities, that's what we could roughly say about 1/3 of a drop. And if we are a little bit between 1/3 and 1/4 of the drop. So let's go up here and then say that this top rate, this is the top here, right? We'll take 2023, this move here on the monthly. So we shot up actually a lot this monthly. Let's say 27%. I mean, that's roughly in line with where we are now. Here's the thing. If we look at the beginning of the El Nino, which started in 2018 to down to where it is, it's a pretty fast progression. We're in an El Nino year, but the prices are still fairly high, in my opinion, because we're above the 50 and the 200. Now we're on the 50, which means that, we'll probably try and find some support there. We are oversold on the monthly, and the monthly looks like it doesn't stay oversold for a period of time. Looks like it tends to rebound, but anything can change in character. We could start to see this shoot up once again because, hey, if it's a pretty bad year for rice, obviously price will go up because there'll, less supply, more demand. It's just going to drive the price up. So that is one thing that we could potentially see. I don't necessarily think this is that terrible, even though it's 27% to go from $13 to $9 and 60 cents, 68 cents. That seems like a pretty small move in my opinion. So if we want to look at maybe something else that might be more cataclysmic, I'm looking for the bad stuff, man. But I definitely think that's looking at this right here. This is a pretty average chart. It's like just finding support on the moving averages. Nothing too crazy other than, if we look at these daily gaps that we see here, like that's a pretty big move for me. I think that's probably going to get filled out at some point. But that really depends on if the rice market is stable until we get to an El Nino.
Yeah, I mean, I might have to. I got my big bag of Kirkland long grain rice over here. I might need to go pick up a few more of those if we're going to see prices skyrocket.
Yeah, I don't know. It's I mean, we've actually made a pretty good move up if we're looking on the daily this year, right? It's been pretty much up
Okay.
only, and then we just see this negative drop here. So maybe there is an opportunity if the rice is going to actually get low supply. There is going to be that any pullback is going to be a good move to the upside. Let me check the yearly real quick, just because commodities are weird. It looks like
Kevin,
it's up.
am I going to get a text from you tomorrow morning or tonight that you have just shorted rice? Like, is that going to be? Is that a likely outcome?
Probably get a better what do you call it? You might get a text that I fried rice, but definitely not shorted. See, I want to do some things with commodities because I do think that this is going to negatively impact the supply of a lot of these things. But when I look at the charts, it's like I'm not sure. Rice charts are weird.
Yeah.
I will say that, but it's yeah, like obviously I think this is less of a thing where I'm looking at the charts to find the answers, and it's more of a okay, is this going to be beneficial for me to get in it maybe in a little bit lower of a price, and then potentially make some money, fully understanding the consequences of an El Nino year on supply. And if that demand, is met, then obviously the price is going to go up. So that's going to be more or less how I would gauge a lot of this. It's not necessarily going to be price charts exact because, like I said, commodities, oil, stuff like that, anything could send this price flying up or down.
All right, let's go into corn next.
I know this
I
one's
did just tweet out
ZC1.
that we're charting corn futures right now.
No, I love corn, man.
So
There it is. There's your corn.
I'm allergic to corn. I found out within the last year. So like
Really?
no more street corn, no more grilling corn, none of that stuff. It's heartbreaking.
I like corn.
Good to know, Kevin. Thanks.
You're welcome. But yeah, corn's interesting here. So I can definitely see there's a three-wave move up here, right? 1, 2, 3. Now this one's a little bit easier to chart, but shooting up 3 waves, I'd like to see what the correction is. Maybe it's 5 waves. So 1, 2, 3. Maybe this has a little bit more to go, a little bounce, and then 4. But this looks maybe like an irregular. Point is, and I'm looking at this on the monthly, this seems like it's finding support very similar to rice. So a lot of these commodities seem like they're pretty strong for the time being. They're oversold on the monthly, but at the same time, they're still above the 50 moving average. We did get the golden cross here. We did see this move up from, July of 20 to April of 22. Is that the move? No idea. I think that we're in a correction for corn though, based on this. The volumes look very constant, which isn't necessarily a bad thing. I don't think there's a bear market or a bull market for corn. I think if anything, the price is going up. More likely that we're going to be in a bull market for some of this stuff. The question is on the weekly, we are between the 50 and the 200, and we're getting pretty overbought on the weekly, right? We'll probably be overbought by the end of this week, so Friday, which likely tells me that the price might come down a little bit. And if that's the case, we might see a pullback in corn. Could see the 50 go below the 200, get your death cross, and maybe that offers us a pretty good opportunity to get in if you are bullish on some of these things if supply is terrible. So street corn might be the way to go if you get a pullback. Where is price going to go? No idea. Let's take a look at the last El Nino, which would have been 2018, 2019. We could see
real quick while you're pulling that up, Ace. We talked about this earlier, but there is the possibility that a large part of the world's copper supply isn't able to be accessed due to heavy rainfall in Chile. We discovered. So something to keep in mind when it comes to any of that copper wire that you're still holding. Might see a premium on that if they can't get into the mines to get it down there in Chile. So there you go.
Yeah, definitely. Definitely might want to get a pickaxe and start going down there because you're not going to find any competition in Chile right now. But
I would I'm just envisioning Ace, right? I don't even know what Ace looks like. I'm just envisioning him jumping out from behind his computer, getting a bag pack, getting to the airport. Like, give me the next flight out to Chile so I can get into the copper mines.
Gonna put his pickaxe under in carry on. But yeah, so 2018, 2019, we can see on the weekly for corn, pretty stagnant, right? 2019, we'll say is the about a year or so, like the later end of the El Nino, we did see a shoot up, right? Saw a price push up from looks like 343 up to 463. So a bit of a pump, right? It's not terrible. It's about 34%. So if we're looking at TradFi, some of these futures, 34%, that's pretty good. It's not as good as Meta or it's not as good as Apple this year, but it's pretty good. But yeah, like again, our main goal is to find money and opportunity in places where other people aren't looking. And maybe this is a play, right? We see a bit of a pullback is likely on the charts if we are going to be using this technically, if you want to believe in that. It looks like let's see, I'm going to do this. I mean, corn.
July is a main trading month for corn. For the remainder of this year, July, September, and December are your big trading months for corn. So there you go.
Yeah, exactly. So if you want to look at this as the megaphone pattern, it's back and forth, back and forth. Go ahead. What were you saying?
I still don't know what this is denominated in. Like I'm trying to find this out, but I can't figure out what the 590 like. Is that USD?
It says US.
Like okay.
I don't know what that is. I think it goes back.
I don't think we're being. I don't know if we're very good at commodities yet, Kevin, but we'll get there.
Well, we'll see this how this plays out. But yeah, this pattern is going back and forth, back and forth. It's trading within a range, which we can easily see, right? Between this one and this one, head, ass, head, ass, head, ass. I think on the weekly we're getting pretty overbought, so we might see a bit of a breakdown. But if we look on the monthly, it's completely it's oversold, and it could stay like that. But I would definitely be keeping an eye on the weekly, because if we do get that death cross, maybe it does push down a little bit. That could serve as a great opportunity to maybe pick up some corn at, I don't know, maybe like 495. It seems like there's a bit of support there. Also coincides with some of this bottom part of this channel. Worst comes worst, maybe pick some corn up at 460. Obviously, there's some support here. Do I think that corn futures traders are looking at support lines? I don't know, but I would, if I'm going to be looking for an opportunity to get in, necessarily won't be now, considering it looks like we have some momentum to the downside coming in. But yeah, I think this could be potentially a nice setup for a good return. Let's say if we get in at, let's say right here at 497, if we want to take a 20%, 27% move, that would bring us up to about 640, right? So that's not too bad. Again, it's all about when you get in, when you get out. I don't necessarily think this is going to be something you want to hold forever, but it's definitely going to be something that's, maybe this is going to play out pretty well for us if we are patient enough to realize. I just lost my stochastic RSI indicator. Wonderful. There it is.
No.
There it
There
is.
we go. Okay. Okay. Yep. I think that is good on the corn side of things.
Let's do one more.
I see. I think we need to get out on the road. We need to get up to Nebraska. We need to see what the cornfields are looking like there. Are there any issues with the crops, and then we can make our decision on whether or not we're going to see enough corn output.
I think Money Never Sleeps needs to go on the road. I think we need to stick some microphones in some farmers' faces and find out what the hell is happening with this corn. I need to know now, not a year from now. I need to know when it's going to bottom. So I can go right all the way up.
We're going to rent an RV and we're going to drive around, really into the heartland, get our finger on the pulse of what's going on the farms. I love this idea. I'll pack up my wife and kid, and we'll jump in an RV, and we're just gonna go all over. It's gonna be great.
Maybe the fucking road show. Let's do it. Let's do one more, just so we could have another commodity that we can see if there's any opportunity in. So pick your favorite type of bean, and we'll do it.
My wife just walks around the corner, just looks at me, and goes, "Uh-huh." So I don't know if this is going to work out for me, Kevin, but we'll see. Let's look at copper real quick. I know that Ace is a big copper guy. Let's do our guy a favor, and let's have you do some charting on copper.
All right, is it just copper
or copper futures?
Copper futures. Right. HG Comex.
I guess so.
Looks good. Copper, how we doing? Weekly looks like it's pretty close to getting a death cross, right? It's not too far. It's trading within a range. It's probably going to be overbought on the weekly in the next 2 to 3 weeks. Right now we're bouncing off the 200 EMA, so that's pretty good. That's finding support. But the only thing is, if this gets below it, there's a good chance that it might dip a little bit. But who knows? Maybe the Chileans are going to help us. They're going to pull us out of this by causing low demand, right? Let's look at the daily. Daily looks like it got rejected actually off the 200 EMA, but we got some room to the upside still. We're oversold pretty quickly. I got the death cross here. That's pretty fast. I'm not sure if that necessarily is going to be super strong of a move. Maybe there is a bounce here, but looking at this on the monthly, do one more macro look at this. I think that we are probably going to might be testing this 200 EMA at 299. That's possible. If we do lose this 50 moving average, again, the monthly closes in what? It's 2 days. So we'll have to keep an eye on that. But if we go below that and then we find some support here on the 200 EMA, that might offer some opportunity to go long at some point. But I do think that if we go below this 50 moving average and then we are testing this 200 EMA, it's likely that the entire market has collapsed at that point. So let's just keep that in mind. But I do think that, take advantage, of every opportunity. I don't necessarily think a lot of things are bullish right now. I mean, we could look at copper, we could look at gold. I don't necessarily think that gold is in a good place right now either. But, there's a lot of these metals and stuff like that that there is opportunities. I just don't necessarily see them being right now. So unless something crazy happens and shoots copper up, I do think that we are on a trend to the downside. This could be a bounce here. We could be looking to make a third wave somewhere around here, the 200 EMA. I think a lot of these things will be tested. It's just a matter of time. It seems like a lot of, like even just looking at TradFi right now, not necessarily optimistic. Looks like we're getting to some exhaustion. Or one day, ETH is plummeting live right now. Is that true?
Yeah, it just took a dump down to 1820.
Wonderful, wonderful. My shorts are filled with good things. All right, I'm just kidding. I don't even know what I'm saying at this point. So yeah, that's what I'm saying with copper. Please, it will. Don't worry. Don't worry. That's what I'm seeing with copper. Real quick, I just want to pull up one crypto chart because I'm looking at this total market cap right now. And here, come on, pull up. All right, so I tweeted out this morning that total 3 looked like shit. It really did. It doesn't look bullish to me at all. But when I look at this total market cap, I also tweeted out that we're going to be under 1 trillion pretty soon. And that was at 1.15 trillion, right? And we're talking about this head and shoulders pattern, and we're pretty overbought on the daily. And we're seeing that we're getting this nasty candle down. I want to see this close below right here, 1.15 trillion. Right now we're at 1.16, so we're finding a little bit of a bounce there. We need to close below 1.15 in order to, pretty much let us know that we are going to fill this gap here on this side. And if that's the case, maybe this head and shoulders is playing out, and maybe we're going to see a mass dump in terms of the total market cap. I don't know if that'll be from Bitcoin regardless, but hey, look, our 29K target was met. So 29K, maybe the 35K to fill that CME gap they were talking about. But it seems like there's a lot of money leaving the space right now. Total 3 is the last thing we'll look at, just because it's important. And then we got to jump off. I got to jump off. But this is the thing that's
BTC dominance has crossed over 52.
Wonderful. We'll see it at 54 in a matter of 2 days. I don't know if that's true or not, but it's definitely increasing whether the price of Bitcoin goes up or down. Alts are bleeding like crazy. You can't win in this market. Bitcoin leads the entire pack. This is it right now. 5,200 on the total market cap. We are so close. And say if we're dumping right now, like alts are down significantly compared to Bitcoin. If this starts to come down, that 50 is going to follow it. And that 200 is reacting to some of the move from back here. So these things are going to cross. And if that crosses, that means you are definitely still in a bear market for altcoins. There is not going to be an alt season, and you're probably going to come down to some of these levels. We're already below this one here. So I would anticipate that we come from where we are at 316 billion. We come down to 182 billion. And if that's not enough, we come down to 115 billion for altcoins. So keep an eye on that. That's really important. But seeing a little bit red in the market right now, not surprised for the short term. I do think that Bitcoin is going to rise from here, just because it seems like the way this game is being played right now, it's whales pushing the price up or down. Michael Saylor definitely bought the top once again, so congrats to him. But that's all I'm seeing. I know this is pretty much about commodities, but there's definitely, like I said, there's opportunity everywhere we go, whether it's commodities or crypto. Just keep an eye out there. If you are trading and you're using BTC against altcoins, that might have been an amazing play recently. I'm not going to go into it right now, but there is so much money to be made on some of these altcoins that are just bleeding to Bitcoin. So definitely keep an eye on that as well.
Okay. I think that is going to wrap it up for today. Where else can you go for commodities updates? I mean, we're out here, we're putting in the work, trying to help you help yourself. So appreciate everybody for watching. Ace, Randy, Mr. House, you guys are the best. If you have not yet, hit those buttons down below. Like, comment. There you go, Ace. Like, comment, subscribe, share us out on social media. I appreciate all you guys who do so. That really does mean a lot to us. We'll be back tomorrow, same time, same place, discussing some of the data that is coming out tomorrow around GDP. Very interested there. And then Friday is going to be a big day today as well. So excited for that. Have a great rest of your day, everybody. We'll talk to you next time.
Take care, everyone.